Welcome to Stock Breakthroughs. I'm your host, Erin Beal. As I'm sure you've noticed, 2007 has seen a flurry of merger and acquisition activity in just the first 5 months of the year, and it doesn't appear to be slowing down. Just this week, we've heard huge news regarding the domestic Big Three automakers. Daimler Chrysler has agreed to sell an 80% stake into a private equity firm. And yesterday, a new financial news titan was born when Reuters and Thomson Corporation agreed to merge in a $17.2 billion deal. Joining me today is Ann Sosnowski, editor of Diligent Investor. Ann has been intently following the M&A activity this year, and she has several suggestions on the best way to profit from all of these deals. Ann, thanks for joining us.
Thanks, Erin. Thanks for having me.
So Ann, can you give us some concrete numbers here? Just how popular are these merger deals, and how are they contributing to the overall strength of the market?
Well, mergers and acquisitions are continuing to propel the market to new highs. By last counts, worldwide deals have reached $1.97 trillion, which is up about 71% from this time last year. Now, 2006 is known for a record year for M&A activity, so 2007, as it's going already, is probably going to set a new record. Now, the thing is, unlike the dot-com era, tech companies are not the only ones involved in the M&A activity this time. It's strewn across a lot of industries like media and mining, commodities, healthcare. You have companies in emerging markets in every industry that look valuable to other companies. Now, an example of this is News Corp's attempt to buy Dow Jones for $5 billion. And then, as you mentioned, we saw private equity firm Cerberus buy Daimler Chrysler. And then we also saw aluminum company Alcoa buy Alcan. Now, those were three pretty big deals. These companies that merge or acquire other companies meld together their businesses in essence. And I call these synergy companies. They're some of the most hottest investments right now on the market.
Well, then let's get right to the point. What of these so-called synergy companies are you recommending right now?
Well, one of the companies I'm recommending is Cisco Core, which is the ticker symbol is SYY. Now, Cisco is one of the top food service industry companies. By acquiring other food service companies, Cisco has been able to pick up about 14% of the market for food service, and it's increased its sales to about $33 billion per year. Cisco has bought 14 separate companies in the last 3 years, and it expects to acquire even more companies this year. Now, Cisco has done very well for itself and looks to be on another rising trend and at a great buy level right now. The reason that Cisco, Erin, has done so well for so long is because it's been able to inorganically grow by picking up smaller companies in its industry and using them to its own advantage.
I see. So are there any other fundamental reasons to like this company, though, besides just the acquisition speculation?
Absolutely. In only 2 years, Cisco has seen its total revenue increase from $29 billion to $33 billion in 2006, which is about an 11% increase in only 2 years. Now, that's true growth and shows that the company is inherently strong. Additionally, its quarterly earnings growth is at 16%, and its return on equity is about 30%. Now, the icing on the cake for Cisco for me is that the company has had 149 consistent quarterly dividends, which is another investing strategy that we use in Diligent Investor. Now, this is the kind of company that you need to look for now in M&A, companies that are strong with large amounts of cash in industries where the M&A boom will spill over.
So then would you say that Cisco is your #1 recommendation right now, or are there other opportunities you're exploring?
Well, actually, Erin, my favorite M&A stock of all time is at a new buy level. It just released its first quarter profits that doubled as a result of its recent acquisitions. Now, my favorite M&A stock is a little-known Kentucky company that has been allowed to gobble up other smaller versions of itself in the healthcare system. Its acquisition activity is nothing short of a government-backed legal monopoly. Now, not only is it a strong company acquiring other smaller companies, but it's also profiting from the biggest trend of all, which is baby boomers.
Well, that does sound like a strong company. So what kind of gains are you predicting here?
Well, I expect gains of about 80% on this stock in 7 months, and it's only $20 per share, so it's absolutely attainable. Now, 80% is just a drop in the bucket. This stock has already given some of my subscribers these kind of gains in a matter of months, and it's moved 380% for investors who bought it at $5 per share. Now, the company's market cap has risen from $57 million to $118 million in just the past 9 months. That's double, all because of merger and acquisition activity that the company is partaking in. Now, as I said before, this is a hot win-win situation for a stock like this. It's operating as an acquisition company in a white-hot M&A boom, and it's part of the baby boomer trend. That is enough to give you 80% gains in a little more than half of a year. But, Aaron, these aren't the only stocks that I'm looking at in M&A. Cisco and this Kentucky company are two of them, but I believe in definitely covering all the bases. Not only do I believe in investing in the companies that initiate acquisitions, but I also like to look at companies in emerging markets that could be picked up by larger companies.
That makes sense. So are there any buyout targets do you think are attractive right now?
Absolutely, Aaron. I'm looking at a biotech company right now that's trading for less than $1 per share. Now, it has some of the most promising drugs in its pipeline and looks like an incredible deal for a company like Merck or Genentech. In fact, it's currently working on an oral obesity drug that should be a blockbuster, considering 26% of Americans are obese and 61% are considered overweight. Now, as far as I know in my research, no major drug company is working on an obesity drug, which makes it a great acquisition target.
It sounds like it. There is a huge market for obesity-related products.
Absolutely.
So these two companies sound great. Are there any other companies on your radar right now that you'd like to share with us?
Absolutely. I definitely believe in diversifying the diligent investor M&A portfolio, which is why I've also looked at banks that are making the M&A deals. Investing in banks that make these M&A deals can be expensive. For example, Goldman Sachs trades for over $200 per share. But there is a smaller company, a recent spinoff, that is starting to strike deals between M&A companies, and it's making money off of it. Now, this bank advised on deals over $1.5 billion last year, including 2 for undisclosed amounts. It has a strong gross margin of 79%, which is comparable to its major competition like Morgan Stanley and Goldman Sachs. And for the year, it's already built a backlog of deals totaling 14 and still counting. Now, all of these M&A companies are different ways to play the M&A boom. There's really no sense in sitting on the sidelines during such a large market event. The market is hitting new highs on M&A activity. These mergers, acquisitions, and private equity deals are giving investors hope in the market again.
It sounds like it. So, Ann, how can our viewers learn more about these companies that you like? Is there a way for them to get the names of these stocks?
Well, Aaron, this Sunday I'm releasing my new reports on how to profit from the increased merger and acquisition activity in the market. So keep an eye on your inboxes for your opportunity to learn about these hot synergy stocks.
Thanks, Ann. We'll look forward to reading your brand new report this Sunday. That's all for this edition of Stock Breakthroughs. I'm Erin Beal, and I'll see you back here next week.